This is your LMAX exchange technical update for Wednesday, November 30th, 2016. Euro dollar. So although we've seen a bit of a bounce in recent trade in the euro, the risk still remains heavily to the downside, with the market focused on a retest of that critical 2015 base at 104.63. At this point, any rally should be very well capped, ultimately below 109, while only back above that level would compromise the immediate downside pressure. Again, if we do see a bounce, look for a lower top ahead of the next downside extension towards a retest of that 2015 low at 104.63. Sterling dollar. So cable is consolidating off the recent 31-year low. The market is consolidating in the 125 area, but overall, while the market holds below 128, the pressure does remain on the downside, and there's still risk for a break to the downside and retest of that 31-year low in the 120 area. Dollar yen. So dollar yen has raced up in recent trade, breaking a previous bearish structure and opening the door for additional upside. However, daily studies are a little bit overbought, and at this point there is risk for some form of a top in favor of a more significant correction before the market looks for that next higher low and fresh upside extension through sustained gains through 115. At this point, though, ultimately only back below 107.50 would compromise the newly adopted constructive outlook for dollar yen. Euro Swiss. So Euro Swiss has seen a nice little bounce in recent trade, but overall, since breaking down below the previous range base at 108, the pressure now remains on the downside, and there is risk for a fresh downside extension to retest the 2016 low at 106.24. The market would need to establish back above the 108 area to take the immediate pressure off the downside. Aussie dollar. So Aussie has seen a bounce in recent trade, but overall the pressure here remains on the downside, with the market looking for that next lower top, ideally somewhere ahead of the 76 area, in favor of a fresh downside extension towards next key support at 71.45. Dollar CAD. So although dollar CAD has seen a bit of a pullback, the pullback is classified as corrective, and the market should look to put in a higher low, ideally ahead of 132, in favor of the next upside extension beyond the recent highs that we saw up around 135.90 and ultimately towards the 140 area further up. Kiwi dollar. Kiwi has seen a nice correction in recent trade, but here as well the market is looking like it's topping out, and any rally should be very well capped in favor of that next lower top, ideally ahead of 73 and down through downside towards and below 69.52 medium-term support, and ultimately down towards the 65 area. SPX 500. The S&P 500 is traded up to fresh record highs and is now consolidating off those recent record highs. At this point, if the market can establish clearly above 2200, it will open the door for fresh upside towards the 2250 and then 2300 area further up. At this point, the market would need to see a break back below 2180 at a minimum to take the immediate pressure off the top side. Gold. So gold is traded down to some critical multi-year or multi-month internal support in the 1180 area. Looking back to 2013, the market had been very well supported on dips towards 1180 before ultimately putting in a major bottom down in 2015. But now these latest setbacks, if we're going to see some form of a major base, should be supported once again in the 1180 area and certainly ahead of 1130, ahead of the next major upside extension back towards and eventually above the 2016 high at 1375. Ultimately only back below 1130 would compromise the constructive outlook, this basing outlook for gold.